Hi everyone, and welcome to this session. We've already done one webinar already, so I got myself a little bit confused. We are going to be looking at the US indices, and also the futures market in general. We've called it day trading futures along with our quantum indicators. So apologies for that. But before we start, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. Okay, very quickly. I know because we don't do this as a series anymore, we have quite a few new people who come along obviously for the first time. So therefore, what are we going to look at? We're going to be looking at the charts, obviously, and the broader picture. But with regards to the chart, we're going to be looking at the chart, analyzing the charts through the prism of volume price analysis. And volume price analysis is looking at the relationship between price action and volume and how that can tell us where the market is going next, because that's really, as traders, that's all we want to know. You know, we can see the price action evolving, developing on our charts, and the question we all want to know, well, you know, what's going to happen next? Are we seeing a reversal? Are we seeing a pullback? Are we seeing a breakaway from congestion? You know, it really does help to answer those very, very fundamental questions. And the methodology is explained in the book, which is on Amazon, A Complete Guide to Volume Price Analysis, and now has over 1,000 reviews, David? 1,000 reviews, yes, and it's just literally come out in Vietnam as well, being translated into Vietnamese, and we had an email from the publisher there who was amazed because it sold 1,000, David? 1,000, it's first week, so my goodness, I'm absolutely thrilled and delighted that so many more traders and investors can understand and profit from this amazing methodology. What we've also done is put together a companion book, because it's really nice to see the signals, the examples, and that's what the companion book does to this one. There's a Forex version as well, and there's over 200. It covers predominantly stocks, but there are indices there as well, and there are also commodities. As I said, there is a Forex one separately. And finally, before we move to the chart, what we like to say is the methodology. It is your foundation. It's what you build on, as it were. So once you understand a structure of the chart in terms of the price action, its relationship with volume. We use candles and candle patterns. Other people use bars, but we stick with candles and candle patterns because the patterns of the candles and the candles themselves, they can also tell you an awful lot about what is likely to happen next. And the fifth element, certainly I would say probably the most, you know, after price and volume, the most important element is what we call support and resistance. And we denote that on the chart. We have price-based support and resistance, and we have volume-based support and resistance, which once you see it on the chart, it will become much clearer to you. And on top of that, you can then overlay that with your favorite tools and indicators, Bollinger Bands, MACD, moving averages, Fibonacci. We've developed our own proprietary software and indicators. I know we have some of our users and students here. So we don't, you know, but you really have to start at this level here. Once you start at this level, everything else follows on from there. Right, what is happening today? Very quickly. Well, the most important the item of event that's happening today is obviously we have the FOMC later, this is our local time here in the UK, which is 7 o'clock our time, obviously much earlier in North America, and markets are kind of all having a bit of a swoon at the moment. So they're clearly sending pardon? As we forecast on Monday, I think, wasn't it? Of basically sending a very clear signal to Jay Powell that they are not happy at the moment, and we know the extent of by which they are not happy. We go over here and we see that the Dow futures are already down 300. We're just waiting for the cash open, which is obviously at 2:30, but they've had a bit of a swoon. The S&P is down 40. Now the Nasdaq has been on a bit of a divergence from the other two indices. And I believe, and it has been sort of marching higher, but that too seems to have retreated somewhat. And where are we? Yes, here we are, a bit of a down day today. We're also in the middle of earnings season, and the nice thing about financial juices, we've actually put these are the aftermarket ones, but will still impact the Globex. We have Tesla, we have Facebook, and we have Apple. So, you know, you have all that in the mix as well. You've got the FOMC, you've got Janet Yellen, who is now officially confirmed as Treasury Secretary. I thought, oh, I think that was probably a foregone conclusion. A new administration in Washington, and as I said, markets are, well, you know, they're looking a bit fragile. Now, as intraday traders, and those of you who come along are obviously interested in trading the you know, on an intraday basis. In other words, you go in and come out, and you know, you start again tomorrow. We always clearly take a look at what is happening we always suggest that you look at the daily chart. Let's bring that up. Where's that gone? There we are. Right. You can read the analysis that goes with this chart in detail over on my blog site, which is annacooling.com. And it's, what did we do? Monday? Or I can't remember. It's Monday. No, yesterday. It was done yesterday. That's right. And essentially, this is a chart, as you can see, it's the daily chart of the YM, which is the futures contract for the Dow Jones. And as day traders, sometimes we look at the daily chart and we give it a quick glance and we say, oh, okay, it's, and obviously with Globex, and we say, well, what happened yesterday? Yeah, fine, it was a bit of a down day, or it was a an up day, or, you know, what's happening at the moment, what is likely to be happening now. But actually, with volume price analysis, if you zoom out a bit and look at it over a slightly longer time period, and look out for those glaring anomalies, because what VPA does, the relationship between price action and volume, is this. What you want is you want to see an agreement between the price move and the volume supporting that or not. And when the two are out of kilter, you have what we call an anomaly. And it will be maybe just one signal. That signal may take, especially on the slower time frames, some time to play out. And the reason this caught our eye and is so glaring is because what we see here, what we've had here, we've obviously had the break away from this, what we call the volume point of control. This is based on volume and price over time. It denotes a congestion phase, and we can see the congestion phase that the YM had been in. It attempts to break higher, went below, but generally was in a positive mood, if you like. Then we also had a big volatility day that day. Then we had this candle come in, and you look at this candle, and what's key is the volume. And this is all it is at the time. Is it an early warning system, a signal? And the reason for spotting it is because it is an early warning system that is potentially, this is fragile, and it's the best word we can describe this market. It doesn't mean it's going to reverse. It could, the chances are it will even carry on higher. But given that this is such a strong signal, in as much that the range of this candle with the amount of volume that is underneath it, benchmarked with maybe candles, you know, you look at this candle here and you look at this candle here, and we look at the overall range of the candle, we would have expected that to move, you know, that candle to be much deeper, much wider. It isn't. Market still carried on higher, but what you then look out for is, well, look at the up candles as they carry on higher. You know, is the volume, what's, you know, is it falling, you know, is it falling back? Is it not, you know, it is moving higher, but under the up candles that we can see here, the volume is actually falling. And we're not in, you know, we're not in a season, obviously volume is also seasonal. We have to look at the context, and it's relative to if you have a holiday, or or it's the coming to the end of the year, as it were. This is a very busy time for trading and investing. So as a day trader, all these individual daily candles are developing against the background that potentially this is potentially going to roll over. As a day trader, you then have to be aware that there's be a certain amount of cognitive dissonance going on in your head, because having seen this signal, and every day that you come to trade, are you then going to say, right, well, I've seen this glaring anomaly, therefore I'm only ever going to go short? You can't do that. And this is where, as I said, your brain doesn't like this. This is why it's called cognitive dissonance. It's trying to hold two contradictory thoughts in your head simultaneously. You have to trade what you see on the chart. So, for example, on these days where the market was, was an up day and it was another up day here, well, you would have traded it to the long side. And even here, where the market did fall, you think, aha, that signal is now playing. Oops, pardon. We've got the open. That signal. Oh, it looks like that signal is playing out. In fact, the market, rallied quite strongly, as we can see here, as evidenced by the wick to the bottom of the candle. And that's why we use candles and candle patterns, because the wicks are hugely important. They tell us, is there buying, is there selling, is there strength, is there weakness? So that's what I wanted to highlight to you. So even as a day trader, yes, we look at the daily chart for context, what has happened in the in this 24-hour cycle that we are at the moment. But by looking at the daily chart in this context, by moving back to the left of the chart and seeing if you can spot any of these anomalies, then that will certainly, it's, as I said, it's just to be aware. But bear in mind that if it's strongly in an up day, then don't keep trying to find, well, I'm going to sell it because I know this is going to roll over. You must let the price action and volume speak to you and tell you what exactly is going on. And the other aspect of this as well is that this was part of the break higher, finally, from the volume point of control, which is just about the 30,000. And so, it looked as though it was going to be the start of, marching ever higher. Maybe 40,000 is the next target, maybe 30,500. But we also have, going back to patterns, we have this sort of flattening off that we have with the YM at the moment. So taken that, looking at the shape of the price action, looking at the volume underneath the individual candles, it gives you a sense of, as I said, that this is fragile. Does it mean that on a daily basis, on a short term, if you're trading, I don't know, 5-minute charts, tick charts, Renko charts, very fast time frames, you're not going to take a trade to the upside? No, of course not. But it is against this background. So I just wanted to show you, to highlight that, and said the importance of what these signals can do for you. Now, I'm not actually going to use TradeStation. What I've got is here we are. This is my MT5 platform, and this is and you can do this on MT. I have an MT4 version now as well. And in fact, what we've seen now is we've seen the open, and you see a massive selling has actually come in as we speak. And what's also interesting is that our weekly levels derived from our Camarilla indicator is we are rapidly chewing through significant. We've had a break from the S3, the third level to the as support and resistance, hugely important. It's where it will either reverse, or if it breaks through, it can go through quite quickly. It went through the S4. Then we had this, as I said to you, this is the buying that came in. Now this is the hourly chart. Now on that wick on the bottom of this candle, there would be traders out there who are trading very fast charts, tick charts, may have found an opportunity to take that to the long side. We've crashed through the S4. Where is the next logical stopping point? Well, this, as I said, this is a derived contract. It's not the actual. We're talking 30,500. We'll certainly should be able to find some support. And then the last level for this week, because these levels are calculated on a weekly basis. On a daily basis, well, we're already at the S6. So once you chew through the levels, the daily levels, we then move to the weekly levels, which you will find on the hourly chart, and right up to the daily chart. And there is a third. There is a third set of levels, which are the monthly levels, and those you will find on the weekly chart. So you play these levels across the time frames. Significant levels on the slower time frames will always carry more weight, and when you have a confluence in the different time frames, then that level, be it support or resistance, this is price-based support and resistance, is then going to be even stronger. And if we look at it on the basis of the move lower that we've seen on the Renko chart, it has been a move lower, but you can see the number of times that we've had an attempt to attempt to rally. We had one there, we had one there. This was that wick that I was talking about. That would have, certainly delivered a reasonable, reasonably quick scalp trade, as it were. But as we can see here, this is an unremitting sea of red at the moment. As I said, partly because we have the FOMC later, and if we have a catch up, as we see here, the volume profile will be slightly different on MT5 because the data is it's not equivalent to what you see in that image, because that's actual data from the exchange. But this is the candle that I was referring to, and you can see here the volume is certainly much higher than the height of the candle would suggest was as it was not in keeping with the range of the candle with the volume. And this is the time that these signals can take to develop. But as I said, there were periods between this was 6th of January and here when there would have been plenty of opportunities for trades to the long side. Right, now what's happening now? We've opened at 2:30. Obviously the cash market is open. To be honest, we've had a break from I'm on the 3-minute chart here. We've had a break from the volume point of control. We had a period of consolidation prior to the cash market opening, and now it's sort of running away for itself. But we had 2 volatility candles triggered. So the danger is always once you've got this momentum building in the market, the danger, the temptation is to jump in and think, right, I'm going to jump in because I want to catch this move. But you really do, I hate to be boring, but you really do have to be a little patient. So I'm going to be a little bit patient on that, which is totally unlike me. And I'm going to pass over to David. Is there anything else you want to add to that, darling? Okay.
Hi everybody, very warm welcome, and thanks, darling. And as Anna said, pretty much blood red everywhere at the moment. I have to say it's almost a perfect storm going on right now. Just move the chat box out of the way. Hopefully you can hear me loud and clear. This is on TradeStation. What you're looking at here are the currency futures. So down the left-hand side here, you've got the 6A, which is the Aussie dollar. You've got the 6B, which is the pound. You've got the 6C, which is the Canadian dollar against the dollar, not the dollar CAD, so it's CAD dollar. Euro dollar, as you would expect, the 6E and the 6N, exactly the same, New Zealand dollar against the US dollar. So basically, when you eyeball, this is radar screen, and these are all the same time frame. So I've got 1 through to 15 minutes. You can have anything you like here, but this is on radar screen. And what it gives you is an instant snapshot of how the market is responding to the dollar. And it's obviously self-evident that every single one of these cells is bright red because the dollar is being bought very strongly and has been bought since we started about 7:30 this morning. It's just continuing its relentless rise, and that is obviously reflected in terms of the futures. Over here, I've got, this is on the 6E at the moment. And basically, it's such a wonderful mechanism. This is TradeStation 9.5. This is a TradeStation hooked onto an interactive broker's account. So that is what's providing the data. Sorry, go away. That's what's providing the data feed, basically. So it's hooked through to interactive brokers. And what it gives you with those two is the opportunity, obviously, to trade through the platform, but it gives you all access to TradeStation features, one of which, the most powerful of which, is probably radar screen, which is this one here. And in each of these windows, I've kept it very simple, but a lot of the indicators can be added in here. You can add the currency strength indicator in here, for example, and it'll show you when a currency pair, or sorry, a currency in your individual or chosen time horizon is coming up to overbought or oversold, or whether indeed currencies are crossing. So it gives you a direct view very quickly, very easily on without having multiple charts open. And I've also got them symbol and interval linked up at the top here. So whenever I click on one of these, this is on 6E. So if we could want to see what's going on in terms of the Aussie dollar on 5 minute, just click on that. That should work. There we go. And off we go over to the Aussie dollar on 5 minutes. So you can literally hop around very quickly, see what's going on. Let's go back to 5 minute on euro dollar. There we go. They're all doing pretty much the same thing. Down at the bottom right here, I've got the Swiss, the dollar Swiss, which is the inverse. So rather than dollar Swiss, it's Swiss franc US dollar, which is why it is going down in the same direction as all the others. Normally you would expect this to rise, but because it's the dollar is the counter currency, they are all traveling in the same direction. I couldn't fit it over here on the right hand side. So basically what you've got is a visual on the trend monitor. I haven't got the trend line on, that's the yellow line, which I'm sure you're familiar with, but I haven't got that on at the moment just to keep it clean. And then over here, you've got the quantum trends. So what you're looking for constantly is, first of all, it just gives you a straight visual up and down in terms of what is happening across the complex, across the major futures complex. And then what you're looking for in terms of individual currencies is when the start of a trend begins in your fastest time horizon. So it's going to start down here in your 1 minute. And then if that is a true change in trend, the first thing will happen is this bright red will go to a darker red. Maybe it'll go straight through to bright blue, could go to darker blue and out the other side into bright blue. But ultimately what will happen is, if this is a true change in the longer term trend, in inverted commas, in other words, across this sort of time slice, gradually over time, these will start to reflect that by changing. So it starts at the top and it will filter its way down to the bottom ultimately. And if that is indeed happening across the complex itself, then obviously you will see that reflected in all the other currencies down here. Now, it may or may not be the case that the currency pair you're trading is acting against the major trend, which again, it will show you. I mean, if, for example, a classic example, probably the pound here, if this were going in the opposite direction, all these were one color and these were another color, that's perfectly fine. There could well be local news. We've seen enough of it over the last 3, 4, 5 years in terms of Brexit and news and all that sort of stuff, where that certainly was the case, where you'd see the pound rising when in fact, in a particular complex, everyone else was going in the opposite direction. That's the nature of trading. I've got the CSI here, you can see it works exactly the same way as you would expect for currency futures, as indeed for the spot market. And you know, we're still going down. Now, on the other side, let's just in fact, before I move away from TradeStation, hold on a minute, I'm just going to switch off for a moment. Sorry, interrupted phone call. Right, let me just get rid of that little message that's come up. This is very simple. We've just got the NASDAQ here, the NQ. Again, similar sort of approach. What I've set up here is a much wider time window from 1 minute through to 60, and you've got the dailies and weeklies at the bottom. And as you would expect on the dailies and the weeklies, this market is still in a bullish trend. It's not going to reflect changes on an intraday basis, but you can see the sentiment. You'd only have to go through all those time frames, and the trend monitor there will be bright red, and it's been pretty much bright red since, as I say, early part this morning. The other thing I would say about this is, just click that up full size, make it a bit easier on the eye. This was the breakaway. This is our local time, which again is really nice with TradeStation. Exactly the same way with NinjaTrader, you get your local timestamp. So there's no trying to work out where you are in terms of the day. So here we are, 10:30 our time, 11 o'clock UK time. Then we start to see the breakdown coming. And it's just a really nice example, breaking away. You can see the speed it moves through these low volume regions on the volume point of control alongside. This is on the 10-minute, slightly higher volume here. Then we move through another slice. Then we come down to the volume point of control where we start to build volume, the highest volume of the session over here. Then we start to move down through another relatively high volume, but we slice through there pretty quickly because of the weight of momentum that's driving this right now. Volatility trigger on that candle, huge amount of volume, which is what you expect. Everybody's short at the moment. As I say, it's pretty much a perfect storm. This could all change later on with the FOMC, but at the moment, that is what is going on in terms of real time. I've got the time of sales here. I'm not going to dwell on it too long. I've actually blown this up so you can actually see it running through. What we're looking for are several different things. I'd have this on a much larger screen. This is basically saying where all these orders are being bought, whether they're bought between the bid and the ask, above the ask, whether they're bought at what level below the bid, and so on and so forth. What we're really looking for is the numbers here. I mean, at the moment, it's all pretty negative, but we're looking at the big numbers, really not interested in the 1s, 2s, 8s, 10s, 15s, whatever. What you're looking for, and there's a big block just gone through, 128 went through. Those are the sorts of numbers you're looking for, and it's how the market then, it's how the price action then reacts to those huge blocks going through. It's not these 1s and 2s that are going to move the market per se. They're just noise level. They're just, that's the nature of the beast. What we're looking for is the real big blocks of volume that go through in terms of contract size, and more importantly, how the market then reacts to those big blocks. Looks as though there is a little bit of buying coming in, but we have got this huge volatility candle. So at the very least, we are expecting some sort of reaction. We're expecting some sort of congestion, possibly even a full-blown reversal. As I say, it's just it's a very neat little window. You can see also I've got the volatility indicator up on here as well. And again, it just gives you that wonderful information about, what's going on across the time frames. I don't have to go to the chart. I know for a fact we've had a volatility indicator on the 10-minute one bar ago. Okay, well, we've got it here. We can see that. We know we've got some on 5-minute. We had one 3 bars ago. Same here. I mean, obviously, at this point of the trading day, there are going to be a lot of volatility triggers being fired off in all different time frames. It's what we expect. It's just the usual reaction to the cash markets opening. All the algos are now kicking off as cash markets come in alongside Globex. But the other point I would make, and I make this repeatedly, and I'm kind of a lone voice in the wilderness here, but I'll carry on saying it, is that people think that trading Globex is not a great way to trade. I would say completely opposite. The reason they say that is because, there's not enough volatility, there's not enough price action. I would say the inverse of that. I would say the price action in Globex when it's trading in isolation is much more measured, it's much more even paced, it's more straightforward. And in addition to that, you haven't got this huge rump of algos which come in and create this massive volatility in the market. So I put it on the table for what it's worth. I do it all the time, and I know there's a lot of traders out there who say I'm wrong. Well, that's fine. That's okay. It's a free market. let's just drop that out of the way. Here we are on NinjaTrader. I've got this running in the background just to really reinforce the point about a perfect storm. Let me pull this over because I mentioned it this morning. This is a little FXCM account we're trading. And I said this morning that what we're looking for, what I'm looking for on this account the whole time, I'm looking to trade, I'm only doing one tactic, trade reversals. And the currencies I keep my eye on the whole time are the yen, the Swiss franc, and the dollar, and the commodity currencies down the bottom here, the Aussie, the New Zealand, and the Canadian. And at the moment, you know, this to me is a perfect storm. What have we got? We've got the safe haven currencies of yen, Swiss franc, and dollar being bought very, very heavily. This is the dollar up here. You can see it's been bought. This is 7, 8, 9 o'clock time, our time, as I say, it's been bought ever since. The trend monitor has been bright blue. This is the UK 100, the FTSE 100. That's where it is at the moment. So that's been selling off quite strongly all day. And then down at the bottom here, you've got the risk currencies, the Aussie, the New Zealand, the Canadian, and they are all being sold. So you basically have got the perfect storm where safe haven is being bought and risk is being sold. And that will be reflected clearly across the other markets. If you go onto the bond markets, you'll see it. It doesn't matter where you look. That is what you're looking at right now. Dollar's still climbing. You can see up here, just pop that up full size for you. There we go. That's what's happening with the dollar. It's pretty strong, shows no signs of coming off just yet. Everyone's buying safe haven. Now at 6 or 7 o'clock, I think it is, FXCM, that may well change. And if at that point, these three currencies are down at the bottom and these three currencies are up at the top, then that may well be an opportunity to say, okay, fine, now we may well see a reversal in sentiment, in which case it's an opportunity to buy those particular currencies. We will see what happens. But that's what it's setting up for. The beauty of the currency world is that it is a market of mean reversion, which means that these currencies cannot stay overbought and oversold for long. They do this all the time. That is what they're doing. You will generally see the dollar following the yen around because they are de facto safe haven. The Swiss franc in a similar way, although there are obviously interventions from the national bank which tend to distort that a little bit, but generally speaking, that's what you're looking for. And the same is also true of the commodity currencies. Although again, you get diversion. It's not true to say this will always be the case. Of course they divert, you know, Canadian will divert in terms of oil, and New Zealand will divert in case of in the question of commodities, and the Aussie will do the same in terms of China, all sorts of different reasons, but that's what you're looking for predominantly. And certainly on that account, that is the way I'm trading that particular account, and we'll see how we go with that. Here we are on, let's just have a look at the three of them on NinjaTrader. Here we go, got all three of them up here. So basically we're looking at the YM, the NQ, and the ES. Just refresh that one. I've got so much data coming in here. It is a little bit sluggish. There we go. So I've got the YM, the NQ, and the ES. So basically I've got the Dow, the NASDAQ 100, and the S&P 500. And has been through why we put that post out yesterday or the day before, yesterday I think, about the weakness of this market and what it was setting up for, which is what it's actually delivering today, which was forecast with the volume. On the 5 minutes, we've got another volatility here, so expect some more congestion here. The NQ is just continuing to break down. In terms of the daily, we've had some divergence between them. This day, for example, we had an up day. The YM closed down a little bit. The ES closed up a little bit. There has been diversion. The NQ has very much been leading the way, but they're all selling off in pretty much the same way today. So it's a sort of full house in terms of risk sentiment. No one is battling against it. They are all following in pretty much the same way. Let's go to the multiple chart array. Here we go. What have I got on here? I've got the YM on here. Okay, fine. Very easy just to jump in, go straight short and say, not even think about it. This is on 15 second. Yeah, I wouldn't be down at this level on this particular day because there is enough in the slower time frames to deliver really, really good returns without having to jump down to this sort of level. So I'd be much more up in the 3-minute, 5-minute area. Let's get rid of that, sorry about that. Because the market is moving, the only reason to go down and trade a 15-second chart is if the market is not moving, and then it's a question of the market moving sideways and you've got to dig out trades, and it's much harder to do that. So you move down to the slower time frames. But in this environment, it's very much just delivering. You can see, you know, nice little lessons here, VPA lessons here. Just pop this 1-minute open. Market tries to rally, volume's falling away, more volume falling away, rising volume in the downtrend. Lots of wicks here. You know, what you're looking for constantly is, particularly in any sort of move like this, doji, weakness, you know, this is indecision, this is weakness, particularly if it's decent volume under there. Down we go again. This is another one. Market's trying to rally clearly in a price cascade lower. Market's trying to rally, wick to the upper body, decent volume under there. You know, it's only going one way. Market tries to rally again, could rally from there, doesn't, rolls over. Then we get more weakness, more weakness, more weakness, more weakness. It's looking at the candles all the time and trying to figure out in terms of volume and also, you know, what is going on. This one looks great, lots of volume under there. Down we go, would have gone down to here. Then the buyers start to step in. We get higher volume than this one. We've got a wick to the lower body, good solid volume under that particular candle. Market tries to rally, decent volume under that candle. Is it going to follow through? It could well do, but given the weight of sentiment and given what's going on in terms of the dollar, which is still rising over on 15-minute, and in terms of the CSI on the hour and everything else that's going on, probably not. So we're back down to continuing lower, and then we're moving into the volume point of control. What do we expect at the volume point of control here? Answer, congestion, which is what we're getting. So that's on 1 minute. Let's go up onto the 3-minute. Similar sort of picture. Volume falling away, but then you expect to see the volume falling away. Remember that it's always in the context of, this is 2:30 our time. So as the market gets underway, expect the surge in volume, expect volatility, you always get it. And then gradually as the market settles, this volume will fall away. It's a natural attenuation of volume purely based on the fact that the market has opened with huge volume and is now settling into the trading session. So, you know, this is not signaling a falling in selling pressure per se. In other words, a decline in the strength of selling to the downside. It's merely telling you that the amount of selling that came in here is so much higher, and this is now starting to settle into a pattern. If we go down onto the 5-minute, and which is why it's so important that you have multiple time frames, what's the 5-minute telling you? It's telling you you've got a volatility trigger on 5. So what do you expect? One of two things, either congestion or a reversal. We are getting possibly a reversal, but that's certainly congestion building within the spread of that particular candle, which is why it's so important to say to have multiple time frames. Now going back to what I was saying over on the currency futures, what starts in your fastest time frame, and this one is 15-second, you can see the rotation of the trend monitor. We've come out of bullish into a change in sentiment potentially, and out the other side into bright blue. So we now have a little run higher. It's not reflected over here yet, and certainly not in the other time frames. But if that is going to truly change into a reversal in trend, in other words, from primary lower to primary higher, then this trend monitor will transition here. You'll see it change there, it'll change through, and gradually it will filter its way through right the way out to your slowest time frame, which is 15-minute. And isn't it interesting to see on your 50-minute time frame, bang, you've got a volatility candle. So what are you expecting? If you're in short there, and I can guarantee you there will be a load of traders got in here at the bottom thinking this is just going to collapse this market, they are now trapped. And they're going to be regretting that decision, probably stopped out ages ago now, because this is moving pretty rapidly to the upside. And that's what I said before, don't just close your eyes and jump into the market and think, oh, it's all going south, so I'm just going to head south with it. You do have to think about days like this. I know it seems counterintuitive, but when the market's fast moving in this way, particularly with a major news release coming up later, which is going to impact this market heavily, in terms of how much more money they throw at it, then it's inevitable that there will be pause points, there'll be reversals. It's not just a question of trading straight to the downside repeatedly throughout the trading session. So are there any questions? Nope. Okay. I'm going to wrap up there because we're jumping on another webinar at 3:15. So let me just point you very quickly at the various bits and pieces. This is where you'll find the analysis, that blog post down that one, I think it was risk appetite waning now the dust has settled, that was that one. So this is where you'll find all the books which are up on Amazon. They're in Kindle there, and they're also in paperback, so you'll find them all there, and several are in foreign languages. We've got Japanese, we've got Chinese, published in Taiwan, and 2 in Vietnam now. So we're very proud of that, and it's very gratifying to see the comments that do actually come back about them as well. So thank you for all of those. If you've commented, much appreciated. So that's where you find annacooling.com. In terms of the indicators themselves, you'll find them here at quantumtrading.com. MT45, NinjaTrader 7.8, TradingView, and the TradeStation. This is 9.5 you've been looking at just now, but in 15 minutes time we'll have TradeStation 10 where we're doing the stocks. Anna will have that on her machine. I'll have the 9.5 running on mine as well. Just a very quick heads up on the TradingView. Anna mentioned it this morning. We're working on the specific indicators that weren't available at the time due to the Pine script limitations. So that's currency matrix, currency array, currency heat map, also the VPOC and support and resistance. They will all be ported across to TradingView in the next few weeks. Once that's done, the price of the TradingView package will go up. But if you've already bought the TradingView package, it doesn't matter whether you've got that part of the education program or whether you bought it independently of the education program, you will get all those indicators free of charge. It's what we do all the time. So if you've bought the full package on anything, and that always applies in the future, if you invest in the full package with us, then you will get all future indicators we develop free of charge. It's as simple as that. Finally, on the Forex program, I know we've got 1 or 2 of our Forex traders students here, and also some of them on the funded as well. We've uprated the funded program. We've done quite a few changes to it, more profit for you. We've increased leverage a little bit on the portfolio manager stage. What else have we done? Quite a few things. Oh, and we've also bolted in. One of the things we were asked a lot about from those on it was, would it be possible to add other markets? And the answer is yes. What we've done is, as soon as you get to the portfolio manager stage, we've added in indices and also gold. So you now have the option to not only trade the 28 currency pairs, but also to trade the major indices and gold as well. So that's it. We're going to run. We're just going to grab a cup of tea, and then we'll be back in 15 minutes. So I hope you've enjoyed this session. We'll be back shortly. And thanks very much indeed for coming along today. And if you're with us in 15 minutes, we'll see you then. If not, enjoy the rest of the trading day. It's going to be interesting. Dollar's just pausing a little bit. A little bit of reversal going on. Aussie yen starting to climb a little bit. FTSE 100 starting to climb a little bit. Maybe we're starting to see the commodity currencies flattening off a little bit on the hourly CSI. So we will see. So we will see you all later. Thanks for coming. Bye for now.